All right. Good morning, everyone. Let's get going. All right. Last night's session in the States was kind of a awkward start to the day. I think right at the opening we saw Ukrainian and Russian tensions really elevate to the highest levels since the beginning of that whole debacle, with Ukraine saying they'd killed five Russian separatists, and that Russia was starting to do military drills on the Ukrainian-Russian border. So really, we got off to a bit of a rough start. There's some wild moves that happened and a few things there at the beginning of the day. You had gold and silver, which we'll show the charts in a second, really drop below major support levels only half an hour before that, and I think a lot of people had just put on fresh shorts and squeezed them out very quickly when that sort of thing happened. Outside of that, obviously the market was really buoyed on the day, especially the S&P and the NASDAQ, on the back of Apple's incredible numbers the night before, Apple being up close to 9% on the day. And we've had another slew of earnings that were out yesterday. Looking at about 76% of the earnings are kind of beating expectations, continuing to kind of come in slightly better maybe than on average expectations. We also had the durable goods and jobless claims numbers yesterday, and the jobless claims number was a bit of a miss, but it was a real beat on the durable goods number. I think the 4-week average on the jobless claims number is still dropping, and I think that all in all, we've really continued to see much better than expected numbers out of the states, and we're going to continue to see that impact the markets if that trend continues. All right, looking at Asian action last night, we saw pretty sharp sell-offs in Hong Kong, Seoul, and Taipei. We had a little bit of more nervousness over some of the bad loans from some of the Chinese banks, I think, leading that sell-off there. We also had Japanese equities actually kind of flat after a hotter than expected CPI number, which I'm actually really surprised that didn't get the market to sell off there. We'll have to follow that story closely, because we've got another chart to show you on that in a minute. But that's actually a big story that we're going to have to monitor, because if Japan has to start taking their foot off the gas with Abenomics because of hotter than expected CPI numbers, then that really throws a wrench in some of the expectations that we've had going forward, and probably going to catch a hell of a lot of people out that have been sitting on the funding currency short yen. Interesting chart here out of on the yield curve spread between the 5 and the 30-year treasuries. It's fallen 80 basis points in the past 4 months, and that's the fastest drop since February of 2007. So that's definitely not a bullish sign for equities. There continues to be huge divergence in markets. I mean, we see it in Asia this morning. Really, there's just not a lot of continuity between how the same region's equity markets move, and there's been very little correlation to what's been happening in the States. Very little correlation between equities and bond markets at the moment, but that's one thing that will not last in this market over a longer period of time. If we have a look here at that CPI number that we talked about in Tokyo, you can really see there how the chances are there's reasonably good that this could kind of be a once-off blip. You've seen here back in 95 to 99, they got a little bit of inflation going. Then we went to deflation for a 4-year period. Then we had little pockets of inflationary numbers, especially as we started to come out of the recession in 2009, but bottom line is this is what they've been trying to do. They've been trying to cause inflation. That's what Abenomics was for. But I think if this persists, then they probably won't be able to continue on with any stimulus. Obviously, throwing a big wrench in the plans there for a lot of the equity investors, and a lot of the guys have been short yen. So just be careful of that. Those kind of things can really, when you catch the people off guard, and some of the big carry trades like that, and the Japanese yen, that can really cause an unwind in asset classes very quickly. All right, let's look at the corporate action overnight. We saw there was a hell of a lot more than what we're looking at here, but some of the big ones, obviously Amazon, Microsoft out. We had Baidu that was actually out last night as well. Some of being the biggest Chinese search group. Baidu had a nice beat, was up about 5.5% after hours. Kind of surprising that Tencent couldn't follow on the back of that. But looking at Amazon, more or less in line on Amazon and in Microsoft. I think that they were kind of trading slightly mixed after hours there yesterday. If you look at PPC's first half trading statement, we're looking at headline earnings per share that look to be slightly better than expectations of 1 Rand 10. We were looking slightly better than that. Guidance is headline earnings per share to grow at 30 to 40%. I think it's slightly better than expectation. So keep an eye on that one this morning. We also today we've got Colgate, Palmolive, and Ford Motors, but things are starting to wind down a little bit in terms of earnings season at the end of the week today. All right, in terms of economic data today, we had, like we said, we had the CPI numbers. They weren't hotter than expected, but like we said, we were just talking about the fact that we are starting to get inflation, the fact that we finally are starting to get those inflationary numbers are going to put a damper on potential stimulus there if these persist, and it's something that we're going to have to monitor going forward. We had the All Industry Activity Index that was a little bit soft. We've got PPI coming out of Spain in a little bit. We've got retail sales in the UK, and later in the States we've got market services PMI numbers, and then Michigan consumer confidence. Basically, there's very little to pay attention to on the market data front today. We're going to want to follow trade action. One of the things that I'd like to bring to attention as well, just looking at an article a little bit earlier, and they're talking about SA bond flows out of the equity markets, outflows from the SA bond market have doubled recently, and you're starting to see that again right now in the Rand over the last few sessions, even with our market pushing to new highs, even with some sort of higher levels of stability in global equity markets over the past 4 or 5 sessions, we've actually seen the Rand weakening, and it throws a little bit of worry out there. Could see the same sort of thing that we saw in the past, the previous months of this year, where we saw the Rand really blowing out on some of the emerging market risk aversion. All right, let's jump into the maps. We're going to focus less on the actual individual shares and look at some of the bigger picture stuff. First thing we're going to look at here is actually spot silver. We'll look at the silver price. We're going to jump into a 2-year chart here. This is the one that I was talking about yesterday. Dropped a hugely significant level as of yesterday morning. You can see there that wick. On yesterday's trade action, and we totally just plunged below this level, and I think we were below it by 2%, and it happened rather quickly. Then yesterday, as soon as we got the Russian, Ukrainian heightened tensions, we really reversed over this. I can tell you right now that everybody and their brother that's in this sector was probably jumping on shorts, or at least giving up on longs, in silver, and we're really caught wrong-sided. And I think that's one of the reasons for the as big as the bounce was in silver and in gold. You saw the same thing happen in the gold price yesterday. What we saw in the gold prices, I'll zoom this even further forward, so we're looking at about a year chart, is major support. If you go back and we see it in the neckline of the head and shoulder, that major head and shoulder pattern that we saw end of last year at 1280. We're right. That was the low that we dropped down to earlier in this month. after the big run up early in the year. We dropped that nicely as well. We traded all the way down to about 1269. And then when the Ukrainian story came out, you see this huge reversal that we had. So these are major levels that we're at still in silver and gold. I know they bounced above. They're still holding. There's going to be things that we need to watch exceptionally closely going forward. I mean, that could have a huge effect on our market. And I think, like we said, the U.S. improving data, all those kind of things are obviously throwing some negative demand into these asset classes. All right, we're going to look at copper real quick out of on this breakout that we saw yesterday. What's going on here? Oh, there we go. Gave me a line now. Okay, basically we've kind of been in a little bit of an ascending triangle pattern off of a breakdown, which is actually looking probably more, if anything, more like a bear flag, but really just putting in a major line here at 305. I think we probably have 15 days out of 20 here where we tested 305 and couldn't get through it. So you can see there, and that's why I would say it's more of an ascending triangle type setup. We finally popped out of the top of it yesterday, and you can see it was a vicious move higher. We traded all the way to about 312 on the copper price, from lows as recently as of 290. So this is a big move to the a big breakout here. I think it's really important. And it actually probably saying that maybe things aren't as bad in China as they're expected. So we'll continue to watch this one really closely as well. Obviously, this is really sensitive to Chinese data, and I think over the last maybe week, 2 weeks, there hasn't been enough negativity there to continue to push this price down into the ground as it has been recently. All right, getting into a couple of local issues. We'll look at Nampak here real quick. Wanted to show this really breaking out just below 38. Broke out in yesterday's session. Well, actually broke out in Wednesday's session yesterday, really getting confirmation. And we've kind of been in a bit of a sideways channel here, going from about 34 to, call it 38, about a 4 rand move. So I wouldn't be surprised to see this thing come up and test the highs or close to the highs up here, closer to 42 bucks over the next few sessions. And then the last one I'm going to show is actually, sorry, that's the London listing. We'll look at the local listing, is SA Breweries, and you can see there this chart's we've been it's been very whippy. You can see how big some of the wicks have been over the past few sessions, but generally we've really been consolidating between about 538 and about 537 and 550. Yesterday we finally got the punch through 550 in the after hours. I mean, earlier in the session it was trading much lower than that. After or toward the end of the session, not after hours, sorry, we popped up through 550 and managed to close above it. I think this thing's obviously, we caught a lot of people off guard here because some of the numbers were soft recently, and then when I think the rumors really started to gather some steam that InBev could really make a practical bid for them, it's really caught some people off guard. The target on this thing is huge. I don't even want to give you a number, but bottom line is a much higher target on a breakout here above 550, and it's probably one that not a lot of people are on board with. So just keep that in mind. The target here is well over 600 bucks. So just watch this one in the next few sessions. I think if there's nothing standing in the way, this thing can really start to trip higher. And that's it for today, guys. Thanks a lot.